Hi, everyone. I'm your host, Martin Lefebvre, CIO at National Bank. Thank you for tuning into our NBI podcast series on the economy and financial markets. Today, I'm joined by Maria Negrete-Gruson, portfolio manager at Artisan Partners, and the focus of the discussion will be on emerging markets. Maria, welcome, and thank you for being with us.
No, thank you. I'm glad to be here.
Excellent. Maria, before we turn into your portfolio positioning and recommendations, why don't we start with some basics? Can you tell us what type of conditions are generally needed for an outperformance of emerging markets versus the rest of the world or U.S. equities more general?
Yes, I think that has been a big question of late, given the underperformance of the asset class versus what has been a very strong U.S. market. I think the reality is when the way we look at EM, in reality, the history of EM demonstrates that the dynamics in these countries, in these markets, is really what drives the growth. You can say, well, you need a weak dollar or you need lower rates. Well, in reality, those have been better environments, but really what you need is sort of dynamism of the domestic markets, and you can have plenty of that today, given even in an external environment or perhaps a global environment that is not so benign.
So you've mentioned it yourself. The U.S. has been outperforming for the past almost 15 years now, but there was a time where emerging markets were outperforming. I recall the industrialization of China and India when the U.S. dollar was indeed fairly cheap. So right now, EM seems to be cheap on an historical basis, whether you look at the price-earnings ratio relative to the U.S. Do you feel that we're on the verge of a reversal of that U.S. outperformance?
From our point of view, and we are dedicated EM managers, so our job is to really to find the opportunity, and we do find plenty of it in emerging markets today. I think a bit of the issue of the past is almost definitional. The part of kind of trying to simplify emerging markets to be the BRICS or just a handful of countries, when in reality the opportunity in EM goes much beyond that. It's almost outside of that BRIC space is where the opportunity lies. And there, those dynamics that you mentioned, industrialization, low penetration, those are very much alive and well. And that is the type of opportunity that we think exists today at a, as you say, very discounted valuation.
You just mentioned BRICS, and I remember when I was more active in portfolio management, it seemed that emerging market was only seen as one block, and whenever there were either China was going well or India was doing well, there were strong inflows. But on the contrary, if there was something in Turkey or a crisis in Brazil, then there were strong outflows. As things changed at all in that sense, what are the strong drivers nowadays?
I think that external driving still remains the portfolio investment. That is certainly part of the dynamics, but the markets have matured to some degree that the domestic dynamics are also very important. And that is what I say, you have to kind of identify the perhaps looking marginal market, but that has very much this domestic dynamics going very well. The consumer, the middle class creation, all these things that happen almost parallel to what's happening in the external world. So I think that is when I say the simplification. There is just a handful of countries. There is just about the large population or the ones who attract the capital. No, it's the other stuff also matters. And I think that is what creates a more diverse, a more sustainable type of opportunity in emerging markets.
Okay, what about volatility? It seems that every bit of news that we get from emerging market kind of creates, uncertainty on the market. We certainly saw over the past couple of weeks the election results in India and Mexico that seem to have created a lot of volatility. Can you tell us why, and it's still the case, and more specifically, perhaps on the governance when it comes to emerging market?
Volatility to us means opportunity. This is where we get the opportunity to get a market, a stock that we really like, that we have been watching and we have sort of liked, but we don't have enough upside. These moments of sort of this election kind of panic, all that creates the opportunity. And I think that is something that is inherent to the asset class, high volatility, the fragility, that we should not expect that. That is part of what it is. EMs will continue to to be that. But then that creates, when you have more of a longer term mindset, a more long-term commitment to the asset class, you can take these moments as an opportunity to enter the market. So in terms of, I think I would say a separate part of the question in governance, I think that is critical, and that is critical to our process. Our process mindset has always been, and process is very long. We have been doing this for several decades, and governance has been at the center of that. We believe it's not the behavior of the market or even the government of the country where you're operating. It's the behavior of the company within that market, how the company knows how to navigate, how the company understands themselves and their responsibility to us as minority shareholders. That is critical to navigate these inevitably turbulent waters that are going to be emerging markets.
What about China? China was almost, I don't recall the exact number, but let's call it 50% of the emerging markets not so long ago. And it seems that it's a little lower now. Do you find that the government is doing enough to kickstart the economy? And what about all the risks surrounding the housing market? How do you view China nowadays?
For us, China has always, relative to this sort of benchmark idea of what China is, we have always maintained a most structural, smaller position. We find that within this trying to create replicate an index with China being a big part of it, it's never been our aim. So within that sort of smaller universe that is China to us, why is that a smaller universe? Because a lot of the parts of China get sort of disqualified in our process for the basics of, I don't know, a lot of the state-owned companies that do not operate as a company. It's more a ministry of the state, so those are not compelling to us. And on the other parts, in the basic governance of these companies, what it is to be a public company, a lot of companies get disqualified that. Then the opportunity is smaller, but within that opportunity, we do find companies we can invest there. I think what has happened, the question is the government doing enough? I think we don't like to rely on that government stimulus as being what drives the market. I think we have to find companies in China that can take advantage of this environment that we have today. And this environment today is one that is more focused externally. The domestic market is weak. The government has been sort of slow at sort of injecting kind of energy to that market, but there's still the export-oriented is a big part of the market. We need to find companies that play that well, that have that capacity. So it is perhaps the opportunity is smaller than when it appears when you look at the huge sort of range of what China is. But even within that, we think that there are opportunities, paying attention, big attention to issues of like governance.
You mentioned you were slightly underweight China most of the time. What type of approach do you favor? Are you more of a sector approach or a geographic approach? What's your current positioning?
Our approach is bottom-up stock selection, so that's what drives our process. So whatever happens at the sector allocation is consequence of the stock selection. On the country, though, we do have a country risk assessment that is very specific to each country. We look at several factors, and that sort of penalizes our target valuation. So it's not about a beauty contest, as I say. It's not trying to rank all the countries from good to bad and say, well, I'm going to go invest in the good ones and avoid the bad ones. It's more about how does it impact to our company being in this country? Do I need to penalize it? How much do I need to penalize my valuation? And that is what creates the outcome, right? So it's ultimately at the stock level, and the country risk is something that is of a penalization, almost a risk mitigation rather than a country allocation. So our process inherently is all coming up from the bottom up, or construction of the portfolio.
Okay, but it's just a result of your bottom-up approach. You're not trying to be market neutral or geographic neutral at all?
No.
Okay, I understand. We talked a little bit about governance, but what about the rest of ESG? Do you incorporate this analysis in your work?
Yes, we believe sustainability and ESG is integral to the opportunity in emerging markets. As I say, ESG is not an adornment that we put on our stocks. It's critical to these companies being able to do what they do. So our process is looking at the earning power of the company, looking at the country risk, and looking at the ESG assessment. When we're looking at unique access to growth or a sustainable competitive advantage, which is what attracts us to a stock, this sustainable competitive advantage has to be truly sustainable, right? If your advantage is to abuse the environment, to like less abuse your employees, well, that is not sustainable in our mind. So we really need to find truly sustainable opportunities to create what is the upside that we're looking for in our stocks.
I understand. Perhaps I'm going to ask you a last question on countries. India has been a superstar of late, and post-COVID, Latin America did also fairly well. Do you have a favorite region to invest in nowadays?
It's about the stocks with us, but the outcome of that has been more inclined towards LATAM of late. India, as much as we do like the dynamics in India in terms of growth and penetration, a lot of qualities, we haven't found sort of as many opportunities as in the past. I think a lot of the euphoria that India has sort of built around, especially a lot of the capital that has exited China for geopolitical reasons and other reasons, are moving to India, and sort of that has created perhaps a less compelling story. So we believe in the earnings story. We continue to pursue it, and we welcome opportunities of correction, like what has happened post-election, to kind of take a deeper look at that market and more opportunities there. On LATAM, very important to highlight, our overweight is not very country specific. We are very diverse in our exposure, and that is something that is not a Brazil-centric, as typically LATAM tends to be. No, we look at opportunities in other regions, in other parts, and we are in Argentina, we are in Panama, we are in many parts that you can say are like fringe parts of Latin America, but in our mind, those are the true expressions of what the stories that we're trying to look for are in Latin America.
Okay, I lied. I want to ask you another question. You said you were bottom up and stock pickers. So how many stocks or companies compose your universe, and how you filter down and, come up with a certain number of companies that you're comfortable with?
Given our vast experience, what we call our library, which is companies that we have done full engagement. We engage a lot with the companies. We travel extensively, 800 meetings last year. Is big part of what we do. Just travel. I just came back from Jakarta. That's part of what we do. So that library is very long. So it's 700 names that we really have full kind of analysis over the years. But the analysts, I would say, they have about 10 stocks in the portfolio and about 25 names in the kind of hard list that we have ready to act on. That is sort of the more limited library of names that have been currently updated. And that is where we grow. The analysts do 4 new analysis per quarter. And that is at the pace that our library grows. These are the 4 names we're analyzing. So it's a very slow moving process in a way, but given that has been done for such a long time, it creates a very large library of which stocks that we have our normalized earnings, our ESG assessment, and our target valuation.
Well, Maria Negrete, thank you very much for enlightening us on emerging markets, and for everyone watching or listening to this podcast, thank you very much for tuning into, and we'll talk again next month.
Thank you.